everyone, Kathy here. Guess what? After 6 straight weeks of hitting our 100 pip a week target, we lost money this week. It's bound to happen, and I'm actually glad that it did because it shows that I'm a real trader with winners as well as losers. Also, it gives me the opportunity to share some of the mistakes I've made and the lessons learned. It is impossible for a trader to win 100% of the time, or even every day and every week. Some weeks the markets are trending, some weeks they're range bound, and some weeks no one has any idea what's going on. This week in particular, we had some wild swings in stocks and FX leading up to the non-farm payrolls report due to confusing and conflicting ADP and ISM numbers. ADP was weak, ISM was strong, causing a roller coaster ride in FX as well as stocks. Then we also had two central bank announcements from Australia and the UK. But if I had to be honest with myself, trading was a struggle from the start, and I want to take a look at some of the mistakes that I made. My very first trade on Sunday was actually short dollar yen, and it was the perfect zip setup. We had one, two, three triple zip sell signals. We were also coming off of Friday where we had a really sharp drop in treasury yields and growing concerns about the Delta coronavirus variant. So I felt like between all of this and stock futures were down, that dollar yen would really break lower. So we decided to kick the week off with a full position short dollar yen. So we put the trade on at 8 o'clock, and then I kind of watched it meander and then spent a few hours actually back above the indicator line. So I decided that before bed, I had a few other positions on, so I was going to cut it to half a position and then just kind of revisit later on. So when I woke up at the start of the New York session, we had already broken down in dollar yen. And had I kept the full position, I would have certainly hit my first target and probably moved to break even and maybe even gotten more out of that. But unfortunately, I only had one half position on. I decided to add on the second half again. And we did see a sell-off. But it took some time, and by the time we got to the New York Open, we got a little bit of a drop. And I was kind of worried about how the New York Open was going to happen, so we ended up closing both of our positions right before or right around the New York's equity market happened. And pretty much as soon as I closed the full position, boom, dollar yen crashed, and it would have been a beautiful zip short trade. So the mistake that I made here was basically not being patient enough because with a perfect zip setup, this was actually quadruple zip sell and it was already breaking down, but I didn't give it the breathing room that it needed. So I wasn't patient enough. That was mistake number one. The next trade was Kiwi dollar. I went long at the start of the New York session. So I went long here. There was an earlier zip signal, which is a little late, but oftentimes there's continuation in the New York session, especially since we had continued to move up towards the highs. So I felt like Kiwi dollar was going to power ahead. Generally, I'm bullish Kiwi because the RBNZ is the most hawkish central bank. Also, overnight, a number of local banks had predicted as much as 3 rate hikes from the RBNZ, so I felt like Kiwi was going to rally. But then it rallied a little bit, and when the New York traders entered the market, into the New York stock market open, it actually reversed lower. So I started to get nervous. It came very close to touching the indicator line, so I decided to exit out early. My stop was not hit. I lost 24 pips on this trade. And I should have stuck in because it didn't violate the indicator line. It then powered higher and was the strongest currency pair of the day and hit fresh highs and easily hit the profit target. So the mistake here was that I had a very strong fundamental reasoning for the trade. A zip signal, we were above the indicator line. It was a clean zip setup. So I should not second guess a solid zip signal plus a strong fundamental reasoning for the trade because that's really our most fruitful and profitable zip trades. So that was mistake number 2. Mistake number 3 had to do with EuroCAD. And EuroCAD actually put the biggest dent into our P&L. So what happened with EuroCAD is that I went long EuroCAD on August 3rd at the Asia session. So pretty much right around here. I went long right around here at this candle. And the trade, was premature because even though we had a strong uptrend and we're in the zip buy zone, The trade got killed by data. I didn't think that the Eurozone PMI revisions were going to have a significant impact on Euro, but German and Eurozone PMIs, which were released right over here, were revised lower. I also thought retail sales from the Eurozone would be good because the German data was better, and Europe benefited from increased vaccinations and reopenings. Unfortunately, the data came out sour. Eurocat stopped us out, then formed a buy signal and shot higher, which would have hit our profit target. So the mistake that we made, or I made here, was I doubled up without the perfect setup because it was a little bit of a mature move already, and I got screwed by data. So, definitely be careful of those trades where it's already a mature zip as opposed to a fresh zip, which tends to be the most powerful. There's also one other trade where we got stopped out by 4 pips in Euro Kiwi before it verticalized. And this was over here. And I think this was on August, if you just bear with me for 1 second as I look back on, this was on August 2nd in the Asia session. So August 2nd, Asia session, I think I went short Euro Kiwi here. Actually, no, it would have been somewhere around here. I went short here and then stopped me out before actually moving significantly lower. So I would consider that unlucky rather than a mistake because we did have the zip sell signal. I went short somewhere around here. Then it stopped me out. I guess my stops were too tight on this before it really collapsed and moved in my direction. For the week as a whole, we lost 94 pips. We only traded Monday and Thursday because Friday was NFP day, so we don't really trade. And only 2 out of 4 days were losers. So beneath the hood, the losses really weren't that painful. It was really just one day, Wednesday, that we took a big hit, largely due to Eurocat just being straight out wrong on that trade. There were plenty of good ones too, like Euro Aussie. If I go back to our Slack, you'll see that we had Euro Aussie, Kiwi Yen hit profit targets on Thursday morning. So there were good trades, there were bad trades, but at the end of the day, it was our first losing trade of the week. I also want to show you that, as you can see from this track record, that there are winning weeks, there are losing weeks, but in the long run, Zip wins. And that's really why I keep trading it, because when we do have setbacks like the week that we just had, we don't give up. We basically go flat and just power forward and start the new week as a new, fresh look at the markets.